BRICS countries are trading without the US dollar. China's yuan is being used more and more globally. So the big question is, should Indian investor start investing in China mutual funds now, or is this a very risky trap? Let's find out. Hello everyone, welcome back to my channel. If you are new here, please subscribe to my channel. Today we are going to talk about a very important global topics: BRICS, de-dollarizations, China's yuan, and whether Indian mutual fund investor can benefit by investing in China markets. This video is not hype. This video is not political. This video is only about facts, risk, and smart investing. So please watch till the end. So what's happening with BRICS? So BRICS countries are like Brazil, Russia, India, China, and South Africa, along with new members countries, are slowly reducing their dependence on the US dollar for trade. For example, China and Russia are trading in yuan and ruble. China and Brazil are also trading in their local currencies. Even other member countries also they are all the transactions they are doing in their local currencies. This process is called de-dollarization. But let me very clear, this doesn't mean the US dollar is ending. The US dollar is still the strongest global currency. So what is happening is diversification, not replacement. So will this make the Chinese yuan strong? Another big question, and the answer is partially yes, but with big limitations. On the positive side, more countries using the yuan means more global demand. It improves China's trade stability. It reduces China's dependence on the US dollar. But here is the reality: the yuan is not a free currency like the US dollar or euro. China controls capital movement. Foreign investors cannot move money freely in and out. So remember this important line: usage of currency and trust in a currency are two different things. The yuan may be used more, but global trust is still much higher in the US dollar. So now how can Indians invest in China market? Or should Indian investors start investing in China mutual fund now? Now let's talk about the most important part of this, like how we can invest in China. So Indians cannot easily invest directly in China stocks. So we invest through Indian mutual funds. So who invest in China market? So it's a fund of fund. There are many ways we can invest in fund of fund. We have first like China equity fund of funds. These invest mainly in Chinese companies like the tech giant, internet giants, consumption. Secondly, the emerging market funds. These investment in many countries where China is usually forms around 20 to 35% of their portfolio. Whereas the third types we have Asia Pacific funds where China exposure is there, very smaller, and it's a little risk less. So one very important point, due to SEBI regulations, right? So these investment limits, there are some investment limits. So many China and global funds are currently restricted for new investments. So always check availability before you start investing in these stocks or these mutual funds. So will China tech and other sectors benefits? Now let's understand whether China's companies will actually benefit. China still are very strong sectors. We have technology platform, we have electric vehicle supply chain, we have manufacturing and exports, we have financial technology and digital payments. So if the yuan's global usage increase slowly, these sectors may benefit in the long term. But we cannot ignore the risk. Chinese government regulations can change suddenly. Geopolitical tensions can impact markets. Stock prices can fall sharply in short note. So here is a very important line you should remember. China rewards patience, but it punishes impatience. So again, these mutual funds is only for I've given the recommendation only for the educational purpose. It is not a advice to invest. I cannot say that you go and invest directly on these mutual funds. Please consult your financial advisors before you start investing. So this is completely on educational purpose. So my answer, yes, you can invest only if you have a long-term horizon of 7 to 10 years. If you have a high risk tolerance, China exposure is should be 5 to 15% of your total portfolio. So you should avoid China funds if you need money in short term, or you are a conservative investor, or you are investing based on only on news and hype. So China should be your kind of satellite investment, not your main portfolio. So let me show you a few interesting articles. This is one article from International Bar Associations, and it's telling that BRICS expansion into payment systems, and it poses a threat to dominance of US dollar. And here is clearly mentioned that there is seeing an increasing trade volume. We'll see here increasing increasing trade volumes, right? And also in the last few years, this is the decentralized scheme would allow BRICS countries to trade with each other without converting to US dollar by using blockchain technology. And there is another articles where the BRICS group, and it's originally composed of countries like Brazil, Russia, India, China, and South Africa, but later on they have included other countries like Egypt, Iran, UAE, Ethiopia, and Indonesia. And these countries all together they represent around 45% of world populations and 35% of global gross domestic product. It is clearly saying that how the transaction volume may increase in the future. And there is another articles you can see it is completely showing how the transaction volume has increased from December 2021 to June 2024. It was 12.6 billion only in 21, and a span of just 3 4 years. It is increased up to 980 billion. So it is drastically changed. So I have filtered out few mutual fund where there is a exposure for Chinese investment. And here you can see in my Excel sheet, first one is Edelweiss's Greater China Equity Offshore Fund, and second one is Axis Greater China Equity Fund of Fund. Then we have Franklin Asian Equity Fund, PGIM Emerging Market Equity. So the first two, they have high exposure, almost more than 90% is they have invested in Chinese stocks. Whereas the second options we have, there are they have invested in emerging market funds, and that may include some Chinese stocks. And this is not dedicatedly they have invested in Chinese stock, but they have some exposure. So you can also check with your financial advisor before you invest in these stocks. It is not at all a advice from my side, but yes, as far as my knowledge is concerned, these stocks may be uh, a right mutual fund to look into for further study. So you can very well check all these mutual funds in Money Control and some other website like Grow App or it, ET Money, Value Research. So here you can able to see here Edelweiss Greater China Equity Offshore Funds. So all the informations will be available, how they are performing, what are their portfolio, what are the risk you have, what are the holdings, where they have invested. So this information can uh, take you to some kind of decision making, and it will help you to take the right decision before you invest. Let's say here we have Edelweiss, and if you see their returns from the last few years, you can go to their performance, and here you can see how they have performed in the last few months or year. Similarly, you can also check for other funds like we have Axis Fund, PGIM, Franklin. So every information that you want to see before you take any decision will be available in this website. Even you can also see where exactly they have invested. Let's say one example here for Franklin Asian Equity Fund. You can go to their portfolio and see their asset allocations, and whether they have invested more in large cap, mid cap, or small cap. All these percentages will be available for you to take decision. And this is their holdings. Let's say this particular Franklin Asian Equity Fund, they have mostly invested in Taiwan semiconductor manufacturing. They have invested in Samsung, and how much percentage or the weightage they have in each stocks or each sectors, so you can get some idea about the investment. So I hope this is clear, and again, this is not a recommendation, this is just a kind of uh, educational video. And before you invest anything, you can check your financial advisor. And if you want us to do your value research, you can also connect with us, and the link will be provided below. Thank you so much for watching this video. We'll come with some other videos, and till then, goodbye.